Oh, good afternoon. Oh, so I told you about pounds, and I posted this on Telegram on the group about pounds, Japanese yen, Japanese yen, the possible move. I posted the possible move. If you have been following up, you must have gotten some things off from this place, up from this place downward to around this area. It has triggered up to this level. You must have gotten something there. Oh, so meanwhile, I already why do I have that convenience? Because one, there is an liquidity zone here at the top of equal highs, that double top. It's liquidity, this thing there. So that gives me the confidence of that once this price is being grabbed, is being swept off, that means you expect a reversal after this stop hunt. Expect a reversal, this accumulation, stop hunt, this manipulation, then price will distribute to the opposite. And this place right now is coming at the top of this major main high here on 1 hour. Yeah. And then if you take to your daily chart, if you take to the daily chart, you take to the daily chart of it of pounds, Japanese yen, we get to see. Let's go to daily charts. Yeah, you can see here, this daily chart. Yeah, so you get to see this in there. I think I posted this on I should put this on the forum. Yeah, the daily chart. You see at imbalance. So the price has already got to the imbalance, and that means this for our charts. Yeah, posted this after grabbing those liquidity areas, this trend line, then this place, this is double top equal highs after grabbing this liquidity area. So we able to push upward a bit to this nearly to touch the imbalance. Then we expect that to reverse because there's imbalance at the top of it, so we could not move to move. So we expect price to drop. That's why price has dropped almost about there. How many pips there today? Almost about 50 pips thereabouts. Yeah, 50 pips, and when we come in conference with your London Open, you got enough reason there. In conference with that, you got enough reason. I'm looking at where I posted the weekly. Okay, weekly, yeah. This is the weekly chart I posted then. Trying to tell you about possibility of pushing down, looking at breaking this price, but it may still go up. If you go up, that means you expect it to you expect a huge drop, right? Yeah. So if you remember this post I posted when it started moving down, I posted this to you. So that means you must have the follow up. If you don't follow up, well, so yeah, this is the 4-hour chart I posted then in balance. Yeah. So let's see how it goes. Now, when we go to the lower time frame to enter the trade, you get to see a CLC. This is why I come to present you the video, because you must be deep in your analysis. You must be deep. You must have confluence of points that will support that will make you, that will make your signal a robust one. So you must be submitted. So if you be following our CIC model, what we talk about pounds, versus the correlation, the positive correlation between the pounds and pounds USD and pounds JPY for some time. We posted some trade, I posted some trades charts on the forum. So it's about 92% correlative. It's correlative. So whenever there is a shift, whenever there's a disagreement in that positive correlation, that means you expect a reversal. So it aids it boosts your signal in AMD. You see, one of my students is perfect in doing this. Mr. Bumi himself. Yeah, he's perfect in doing this. He has posted a lot of trade results. AMD and CIC, using a CIC with AMD. So that means CIC is going to serve as a filtering process, as a checklist to filter any bad trade setup, So before you enter your trade, you want to see the high probability of it moving far as you expect. Yeah. So like if for pounds Japanese yen, this is 5-minute charts on pounds Japanese yen. Then by your right, you have the pounds USD. So we relate them with each other. So before this place, there was a positive correlation. They were both moving upward. They were both moving upward, right? So there was a positive correlation between both of them. So they were both moving upward. So higher highs and higher lows. A series of highs and higher lows. Both moving upward. Okay. So if you at 7:50 a.m., we saw a pattern. We got a pattern that is, that is disruptive to that correlation. Why pounds Japanese yen was breaking through the, grabbing the liquidity, this liquidity high, at 7:50 a.m., right? But here at 7:50 a.m., this thing has really gone down. It has go far down than pounds Japanese yen. Pounds USD right here has gone down below this high. You understand? So this is our previous high, and this is the range. So this forms our range, right? But inside the range, you can see that the present high right now is below the upper range, whereby pounds Japanese yen has broken above the upper range. So that gives you the implication or the indication that there is a manipulation. There is a manipulation on top of this pounds Japanese yen, which this guy is helping us to deduce, is helping us to discover, to identify. Yeah, so that means as the guy took off the liquidity high, this guy there's no liquidity high to take out here, except you have to go up here or come down. So there's no liquidity, any liquidity significant side to take out. There's no liquidity zone between here and this place. So the guy remained low, the guy remained solo on his own, while the guy tried to take out the liquidity of previous high. At 7:50 a.m., so we have this pattern of what? We have this pattern of a higher high on pounds Japanese yen. That's part of higher high on pounds Japanese yen. While on pounds USD, you see the high comes lower. It comes lower. So that gives us a lower high pattern. So that means there's a crack. So this is a negative crack in correlation, a negative CIC. Yeah, so it helps us to filter that top, how probable, how predictive that top reversal will look like. So the Euro USD, the pounds USD is serving as an indicator, as a divergence indicator to JPY, pounds JPY. So that means we expect, when you have this pattern, we have this pattern like this, we expect what? We expect price to do what? Price to move lower. So I think I posted this on your this thing, right? I posted it carefully. Posted the CIC stuff. Yeah, great. Point of confluence. You know, and because we have a lot of confluence points there. Today is Friday, end of the week, reversal of AMD. Then pounds, lower high, Japanese yen, pound Japanese yen, higher high. So I posted it. So AMD liquidity inducement plus CIC model structure. So I posted it. So you expect what you expect price to. It has already been moving since almost about 49 pips. Yeah, 49 pips is gone. So that means prior to, that means at London open with it, as London opened with it. So in connection with that, it pushed it downward. Yeah. So now, if we go to my, let's move back to my drawing board. So I just want to show you how it moves, how it moves. So how you can take advantage of that. You see it? I don't know why this is start coming down. Oh, shit. So you can see that, the move. You can see the move. So on 5 minutes, So immediately I got that withdrawal of this place. I'm going to look for what? I'm going to look for a reversal candle. Yeah, a reversal candle that will set me up for a reversal for sell. Here, can you see it? Yeah. So two of them must be in the same direction. They follow the same direction now. So that set me up. That's what you wait for to see. So now 750, and about to break. Alright, so we expect, because this is manipulation, accumulation, we expect the price to distribute profit downward. So that is that. So go to 1 minute time frame. Can see it. You see the move. You see the move downward. Yeah. It was about 49 pips. See the move. Yeah. Very sharp. There is no even, it doesn't even give a confirmation. But if you are smarter enough, you are doing your engulfing pattern to enter. Both of them display engulfing pattern at the level of liquidity graph. They both display. This is engulfing. It's engulfing. So if he collapse the entirety of this place with this place, give a pin bar. Yeah, that will give a pin bar. Yeah, something like this. Give a pin bar, something like this. Yeah. And whenever you find pin bar at the top of the liquidity graph, you expect what? Get to liquidity, you expect price to move downward. So if you connect this place with this, you collapse this place together, that is rally upward, then price rejection downward, movement upward, then price rejection downward. That gives you what? It will give you a pin bar. Yeah. So the same thing here. If it collapse here, this is the opening price. This is the opening price. This is the closing price, right? So what will it give you? It will give you a pin bar too. To give you a pin bar, right? Something like this. So this is open. This is close. So you now have a long tail, a wagging tail. Yeah. So that is a price rejection at an upper that rally, price rejection. So we expect price to move down. Now let's go to our meta for trader and see how that takes place. So this is it, right? This is it, 750 at 750. This is 750, right? 750. Then here, this is 750. 750, right? So you trace from here backward to connect with the most recent high, right? Trace backward to connect with the most recent high. Trace from here backward to connect with the most recent, as in the one that comes. Could be either this, could be this. There's a liquidity graph here too. Yeah, you can see that. So that makes this to sell, which almost about 57 pips, 57 pips. While pounds USD only moved down with almost about 30 pips. 30 pips. And London, what London breaks up at 755, 758. This is London break, right? Now, so we want to put this play at 1 minute. Look at 1 minute to see if there's any confirmation pattern at 1 minute. I don't think so. So yeah, I don't think so. There's no confirmation pattern on 5 minutes. Yeah, there's no confirmation pattern. But what do we get there? What do we get? Get a candlestick. You just have to be smarter enough. Just have to be smarter. See it? See it? Liquidity grab of this double top. Then at the top of which you have what? At the top of which you have your pin bar on the top of it. So you have your pin bar. So which represent price or upper price, higher price rejection, right? Yeah. You see it opens, then close below it. I mean, on top of it here. So this play from here to this play will represent the weak rejection. So if this is an aggressive entry doesn't come with a retest. An aggressive entry, it does not come with pullback on 1 minute. It could have on 30 seconds, but yeah, I don't have the 30 seconds time frame on trading view. So it could come with that. I don't know. So you just have to be smarter enough to trade so that you don't lose the trade much. You just have to be smarter. If you don't see that, when you come down here, you get no meats. You know. So but meanwhile, on top of prior to this place, we have a confirmation entry, right? Confirmation entry. So if your stop loss is here, your stop loss is above here. That's prior to this 750. And we have right. Yeah. So if you are take it from there. 5 points. Yeah. So we don't want to use that. So that's how the trade moves down. That's what gives the listen move like that. Now, when you come to the bottom of it, we have another distance, right? See it here. We have another one. At the bottom of it, we have another crack, right? This is let me go and show you on my drawing board. Yeah. On 1 minute. See it? Yeah. Can you see that? Why this one has grabbed up this time around? We have liquidity manipulation on pounds USD, why pounds Japanese yen is acting as a divergence indicator. You understand? It's acting as a divergence indicator, price as a price indicator. Why pounds USD is acting as a price manipulator. So you see here, this at 708, between 708 and I'm sorry, 908, which is a London open. You know, after grabbing the liquidity here, this place, after grabbing off that liquidity, it came down, got it retested, came pulled back. This returned to the stop hunt. So this confirms your what? Your sell entry. So this pullback that give us an opportunity to buy entry. Yeah, at 19 minutes after 9, right? But here at 21 minutes after 9, we still have manipulation going on. Can you see it? So we have something like this, lower low on pounds USD. Why on pounds Japanese yen we have a higher low, right? So that is a crack. That's a positive correlation. Crack in correlation, positive crack. So that means price will rally. So it's an indication that price will rally, right? Yeah. So if you want to trade, you just come here and you can imagine the distance it gave us there. I first part of it. Yeah, this is a golfing there. I'm seeing a golfing there. Let me remove this thing first. Yeah, so can you imagine how it goes? See it? Up to as at that time, at the time of putting up the report, then you can imagine. See it? So if your stop loss is here, it's hardly got hit. This is going to be your area of stop loss. So with 3 pips risk, this is your stop loss with 3 pip risk, confirmation entry. Sorry, yeah, risk entry. With the pullback, but it doesn't have a BMS, so it's not a confirmed. That's a risk entry, aggressive entry. Yeah, so this one has 3 pips risk, and this one has a 5 pip risk, but this one is more volatile than pounds US. So it started moving faster than pounds US. Can you see that? So that's how we got, because this is at London DC2, yeah, 908, and it just started distributing to above. See how many DC you must have captured there. Must have captured there. Must have captured there. Almost about let's see. So this is your stop loss. It's your stop loss. 2 pips. You can imagine to capture almost 45 pips. 2 pips, because it's going to be your entry price. You're smart enough. It's going to be your entry price. Then your stop loss is here. 1.9, approximately 2 pips to get 45. 2 pips to get 45. That's how much. That's how many reward do you have there? You risk that, so that is a good risk reward ratio. 45 divided by 2. That's almost about times 23. You can imagine that. You can imagine. So you can imagine that. So it gets to 12:06. So I'll be ready for what? I'll get ready for this thing. And why this guy moves? Can you see that? See, this is worth time. This guy is 908. I mean 908. At 908, you have this guy here. 908. So 908 around this place. Oh, wait. Those are the moments. Yeah. This is 908 around here, right? Around here. This 908. That's 908. Meanwhile, here, this guy has already got to the last lower low, right? But this guy was still manipulating. So this now forms what we call a lower low. Why this guy forms a higher low? A lower low. So this guy is manipulating. Why this guy has already started moving? Started moving. This is the confirmation. So as you get to this place, you buy. As this one turns into a pullback, that is, they're facing, both of them are now facing the same direction. At 9:30, 9:30, 9:29, 9:30, you started seeing the pullback to it. So it's now in correspondence with this, in sync with pounds Japanese yen. So you move, both of them enter buy. So this guy will deliver 45 pips. Why this guy delivers how many pips? How many pips? Wow, 29 pips. 29 pips. And what is the stop loss there? What is stop loss? Because your stop loss is going to be here. That's almost about 1 pip. 1 pip. That's cool. That's cool. On top of it now, recently we have another crack. So it happened. You can use this crack to just continue to use it to eat, to scalp the market. This is 12:07. 12:07 getting to New York open, and our 12:07 should be around here. $12:04, $12:05. See, so as we have 12:07 here, right? So this is a higher high. There was a manipulation above it. The price was still manipulating into a new higher high. Was still manipulating at 12:07. But here, the price has already gone down into a new lower low. Can you see that? That's already gone down. It does not pull up to manipulate. So it's already going down. It forms a lower low. So this is a good confirmation entry. Yeah, a good confirmation entry. A good confirmation entry. Good one. Why here we only have this place as our see confirmation entry here. It pulls back to it. See it? There. See our CP. So CP. So here will be your entry price right now. Your stop loss will be at invalidation point, almost about 3 pips to get 22 pips. Guys, this is on sub. Then from here you get, and it's still moving down. It's still moving down. Get almost about 15 pips, and your stop loss will be 2 pips. 2 pips stop loss. So you can imagine that. So that's how you use CIC, to refine the stop hunt of AMD. You use it to refine it to see the high probability of that reversal that is going to take off at stop hunt zone, at stop hunt level. So guys, that is that. And let me then, I'm having one here too that gives me a kind of concentration. You see, kind of concentration. And see, price here was at 25th of January. This is good. 25th of January, this is daily chart. 25th of January, we have price was moving upward above this liquidity, right? It was moving upward above this. Then on Euro USD, what do we have? Euro USD, what do we have on the 25th? On the 25th, this 25th, right? So we have what price is moving down like this. We have this. We have something like this. Oh, good. Something like this. Slower high, right? So this is 25th, Abi. This is 25th. You can imagine. So we connect it to our previous high. So it gives us a lower high. While at this place here, we have it like this. Higher high. 25th. It forms a higher high. So there's you see, while gold was grabbing this liquidity here, grabbing the liquidity top here, Euro USD already falling down, already falling. So that means a sell. That gives you a sell. You can imagine the pips from that place. The pips from that place. This is 20. This is 25. 25, right? 25. So this is 25 candle, daily candle of 25. So immediately you got this. You got this. This crack. This crack. Immediately you got this. So this is lower high. This lower high. Lower high, right? Immediately you got this. What do you do? Can imagine you go to gold and you have this thing on gold. You have this thing on gold. Liquidity grab on gold here. Here. On gold. So immediately you got this, what do you just prepare to do what? Just prepare to on 25th. So This will have been my range. Have been my range. Have been my range. My range. See as price continues to grab off that liquidity and then reverses, distribute profits in the opposite. Price grabs, this will be my range. Price grab the distribute price downward. This will be my range. Price grabs over distribute downward. This will be my brother. This is huge. Price distribute downward. This will be my range. Range. Oh, see this place. See it. See it. Are you seeing something here? See this place. This is a range, and price grab through and push upward. Grab it. So now you have a crack there, right? Let's play it forward. You see it grabs the entirety of this high, right? It grabs it like this, it pulls it up. There was a grab, so we expect price to move downward. So it grabbed this liquidity. Again, we expect it to do what? To move. Oh, it does not go. Okay, this is not a significant, you see, this is not a significant low. It's not a significant low. So this place here, we expect price to push upward. Because today is still going, still moving. So maybe at the close of today, but today this is on the 28th, and the close of today, you can see because it's already withdrawing from this place. This place here, this place. See, that's the movement. So that is that for and Euro USD. You can imagine the move on Euro USD. You can imagine the move. On Euro USD. So that's how to use your CIC model, and wow, I love this. Wow, so powerful with code. So powerful with code. So powerful. Just identify your range. See it grabs that. It grabs, it grabs this place, and what happens? Drop back. It grabs here together with these two. Grab the two together. This place was grabbed, and that is that. So, guys, so that is how to use your